Hi, Joe DiChiara, CPA and proud founder and CEO of Bedrock Tax and Accounting Solutions. And I'm here today to talk briefly about what tax planning is. It's one of the services that we provide, and it's above and beyond what tax preparation is, which I explained in a previous video. Tax planning is really essential in tax minimization. And what it is in a nutshell is if you're a business owner, tax planning is all about keeping your financials current and up to date, and knowing exactly where you stand at any given point in time so that we can extrapolate then what's the year end going to look like. Now, it's not as simple as just looking at this year's financials. We have to look at previous year's financials to see any kind of sequences, any kind of patterns that might happen. So for the business, that's how it's done. Now, for the individual, it's completely different. If you have a job, okay, tax planning is going to be getting the latest pay stub, seeing how much has been earned up to that point, and then extrapolating the rest of the year. Again, getting all of the other information that's going to go on your final return, interest and dividends, if anything else occurred out of the ordinary, if there was a stock that was sold for a profit, if there's cryptocurrency, that's going to be a big thing right now. If there were any 1099s issued as self-employment income that we didn't know about, that all has to be addressed. So the objective is to take the snapshot while there's still time to plan. After December 31st, there's really no planning that you can do. The window has been shut. You individuals are what we call cash basis taxpayers. So it goes from January 1st to December 31st. So the objective of tax planning, and it's not always tax minimization. Yeah, that's an objective. We always want to pay as little taxes as possible. But sometimes it's about, hey, next year we're going to have a banner year. We started this business and things are starting to hit. And next year we're going to be in a higher tax bracket. So maybe tax planning could be, hey, let's accelerate some income, put off some expenses when they're going to be worth more. But last but not least, tax planning is really so that there's no unpleasant surprises. You don't want to get hit with a tax bill. I have a client, she said she was suffering from post traumatic tax syndrome. Her accountant used to call her on like the last week in April and say, "You owe $80,000 and it's due in 3 days." That's not good for anybody's blood pressure. So it's okay if you owe money, but there's no reason to find out in the last minute. Okay, so that's my story. I'm sticking with it. If you ever have any questions about your particular tax situation, feel free to book a free chat with me. All you got to do is go to timewithjoe.com, and I'll be happy to talk to you about your business and your current tax situation. Thank you.